Well, good afternoon, everybody, where you're tuning in. This is Stride Live, and I am joined today with the incredible and honorable Matt Kerrigan as we are talking all things about how MSPs can manage their business's cash flow. How you doing today, Matt? Thanks for joining me.
I'm doing excellent, Casey. How are you doing?
Oh, terrific, terrific. So, before we get started, I want to start with a very basic question. Cash flow. What does that mean to the typical MSP or a business owner? Because obviously, I want to really establish what that is as a function as a part of their business.
Absolutely. Cash flow, when I think about it, and what I really want to focus in with my MSP clients is the amount of cash that is generated from your operations. So, a lot of times you want to have in a strong forecast that is able to project what that cash is being generated from the business and positive or negative. Obviously, we want that to be positive, regular cash flow. There's going to be certain times in the business where you're going to make some investments, and you might have periods of time when it is negative cash flow, but you want to be making sure that you're planning for that and checking regularly. So it's really that amount of cash that you're generating from operations.
Free cash flow, how much are we generating and what is the use of that? So that leads to my next question. Before we talk about what MSP and owners can do with cash flow, what is an element where you find MSP owners or an area you find them struggling with cash flow or understanding how to manage cash flow?
Yeah, that's a great question. Oftentimes, clients will not necessarily understand how much cash they should be holding within the business, and that can be an element that they really struggle on. There's certain clients that maybe they have too much cash, so too much idle resources, where they could have maybe given ownership more distributions, or they would have had more to invest in the business. So I like to have a guideline of having businesses at least 3 months of operating expenses of cash available at any given time. And the reason why I think this is a good standard is, you don't have to worry about any cash flow issues in the middle of the month. So if that number is under one, then you're going to have times when you might be worried if you can make payroll, or you might be worried about if you can pay that big vendor expense that you have. Might be with ConnectWise, that you have that major invoice each month, and you might worry if you can make that payment. And you don't want to have too much cash. So if you have 5, 6, 7 months, then those are idle resources that either you could be giving distributions back to ownership, or maybe there's additional investments that you could be making into the business, either in sales or marketing, to be able to get new clients. So I really find 3 months of operating expenses, cash on hand, is really that good guidance to provide to clients.
Gives them balance between having enough cash on hand to cover obligations in the near term future, but not so much that they're sitting on piles of cash and not investing and seeing a return on that. I think that's a very simple math and formula. Now, when it looks at, for instance, some of those investments, what are things that MSP owners should be looking to invest? Let's say I have my 3 months of cash flow. What should I look into? Should I look into prepaying taxes? Should I looking for new vendors, cost cutting? What are some of the things that you should look in terms of the levers for cash flow?
Yeah, the one thing you really want to understand is what are those investments that are giving you that return on investment. So if you feel like you have a pretty good sales team, and they're pretty maxed out in terms of the current ability to get new clients, oftentimes that's the area where you want to invest in that additional salesperson to add to your staff. So this again gets to a good reason on why you want to have 3, even 4 months of cash on hand, because when you bring in a new salesperson, and especially if they're not familiar with the MSP space, there might be a period of time of 3, 4 months where they're really training, getting up to speed. So you're not getting a return on that investment, but you also don't have to worry about the amount of money that you're paying them, because you had that excess cash kind of on the sidelines that you're able to do that additional investment. So definitely investments that will help grow sales are ones that I particularly direct clients to do.
Got it. Got it. That makes sense. Now, Talk a little bit about what are some of the considerations where you can improve cash flow? What are some easy things that many business owners, MSP or professional services that they may overlook for easy win, quick hits to improve their cash flow?
Great question. Yeah, what I direct clients to do, especially when they're onboarding new clients, is to get those clients on a pre-authorized ACH payment of invoices. And really that onboarding period, that tends to be the time when the customer is looking for an MSP provider, and they're more likely to take suggestions like that early on. So if you can get them on that pre-authorized ACH, so you know that on the first of every month, you're going to get that MRR coming in like clockwork, and you don't have to be hounding them with emails and phone calls trying to get them to pay invoices. That's really key, as well as in terms of paying bills. Oftentimes, you know, if it's an owner operator MSP and the owner is obviously very busy, and if they are also the one that's in charge of approving bills, oftentimes it's really ad hoc about when they have time to go in and approve the payments for the bills that they have on hand. And so what I can often see is bills getting paid ahead of due date. So, maybe it's a net 30 days and it's the middle of the month, and the person responsible for approving bills has time. They just go in there, approve all the bills, but now that cash is going out 1 to 2 weeks before it really needs to. So I really advise clients to be able to stretch those payables out as far as they can, because they're going to have clients themselves that they're not going to pay on time. So you want to really make sure that you're not paying bills faster than you need to.
Absolutely, especially with MSPs having so many sources of revenue between recurring agreements, products, projects, subscription licenses, and everything else. There's already enough that they're trying to collect. The more you can get the recurring, the things that don't change consistently or on a month to month basis, getting that cash flow in the beginning, it's definitely powerful. But I think what you said on the second point, don't pay your bills too early. If you get the terms of net 20, net 30, use those terms. Understand what your cash flow cycle is. Find a advisor, find somebody who can manage and monitor cash flow so you're as efficient as possible in that process. Now, Matt, something we do, as you know, as part of here at Stride, is that regular expense reviews. And this is somewhere where I think a lot of MSPs miss a great opportunity. We all have home and personal subscriptions we pay for that we're not aware of. MSPs in particular probably have anywhere from 5 to 10 vendors. I remember when I was at an MSP here in Northeast Ohio, we cut out 25 vendors in like my third month, and we had no clients going, we had no engagements, but we were paying a fixed amount. It was, it wasn't insignificant, a few thousand a month. But talk to your experience that you've seen working with some MSPs around how powerful cost cutting can be, where it doesn't reduce the quality of service or the efficiency of the business.
Yeah, I think I would correct you on one term. I like to use the term cost optimization and not cost cutting. Cost cutting has that
Smart.
negative connotation that, I'm trying to squeeze profitability, where cost optimization, it's looking at not necessarily trying to squeeze your vendors or anything like that. It's making sure that the investments that you're making on both cost of goods sold as well as on the operating expense side is optimized to reach your business goals. So having said that, what can often happen with MSPs, because technology changes so quickly, that the vendor that might have made sense a couple of years ago for what they're trying to achieve, there's another technology that's kind of taken over. Now you have the MSP have a relationship with both vendors, and really that doesn't make sense from a cost optimization standpoint. So I will heavily work with the clients to, on a quarterly basis, do that in-depth expense review. And if expenses pop up in any given month, don't just wait for the end of the quarter, also have that conversation as well. But those reviews, what you'll find is you can find situations like a good example I've had is with a physical data center where, a few years ago, the client had this physical data center that was servicing 6, 7 clients. And then fast forward today, when you had some client churn and clients moving to the cloud, now that data center is only servicing 2 clients. And so there's all this fixed overhead that is allocated to the data center, when it turns out it's probably losing money for the business overall. So then the client can take a step back, figure out, for the clients that are using that data center, how can we charge the appropriate cost to them, and if not, get them and move them to the cloud.
Absolutely. So I think I love it. I love cost optimization. That is a much better connotation for that. So just to recap, we've talked a little bit. 3 months of operating expenses, cash on hand is the ideal target for an MSP. At the very least, quarterly, looking at your cost optimization, getting understanding through that cycle. What else? What's another opportunity where they can look maybe into customer profitability or how they can manage and say, hey, we're efficient as possible as we are serving our clients and have an expected level of cash flow. What's something that clients or MSPs can do around that?
Customer profitability is very, very important. The one step I would say before that, taking at a higher level, is taking a look at what does your managed reoccurring revenue, how does that compare to the whole entire cost of your organization, non-product costs. So I like to call it MRR of non-product costs. So the non-product cost piece of it is you'll have product costs, you'll sell laptops, servers, whatever. It's not including those costs, but every other cost that you have in your organization, from your people to all the vendors that you're working with, you want to take all those costs and you want your reoccurring revenue to cover that at least 100%. So what that means is your reoccurring contracts will be able to cover the overhead of your business. In a perfect world, that goal will be 110%, but let's say it's 100%. And then what it means is the margin that you're able to make on product or project revenue, as well as margin that you make on products, will help you with the profitability. So there's clients that I deal with where that ratio is more closer to like 70, 80%. And when you're functioning in that standpoint, now you're banking on having good project months of revenue as well as selling product in order just to break even. And that's where I find clients that are in the lower ratio. That's when they really struggle with cash flow management, and they often work in negative cash flow. And that's what we don't want to be.
Absolutely. How often would you recommend that MSP owners or account managers look at their client agreements and increase scope or make sure they're doing in-depth scope reviews? Is that a annual thing, biannual, monthly? What does that look like in your experience with the MSPs?
Yeah, I would definitely say every 6 months. It can be quite a thorough thing to go through. So what I think works best for MSPs is think about it as you're doing a chunk of clients every quarter. So you're not just trying to say, hey, we're going to do this twice a year, but it's a process that you have people that are responsible for doing those reviews, and you make that goal of, let's say you have 40 clients to say, hey, we're going to do these 10 clients this month. And that's the goal. And you report on that goal weekly. So you're held accountable to ensure that you get through all that work during that quarter. So you'll touch on each client at least once a year.
Absolutely. Absolutely. So I think that's very simple. So, I mean, it's really easy recap so far. How to manage cash flow, making sure you have 3 months on hand, covering operating expenses, pre-authorizing collections and ACH of the recurring transactions. Getting that MRR hitting the first or second of the month is powerful. Delaying your expense payments or bill payments on the terms that they're due, not paying bills too early. Regular cost optimization reviews, great term there, and then client profitability metrics. Man, is there anything else? I mean, I feel like that's a lot. That's a lot of opportunities for an MSP owner. If you had to really boil it down to, let's say, one thing that an MSP owner could take tomorrow for an hour on a Friday to improve their cash flow, what would you recommend?
Yeah, the number one thing at the end of the day is that their agreements are profitable. And I think it can be often difficult as an MSP grows that you're chasing sales. So you might be in a position initially that you're taking on sales that might be low profitability at the beginning, but you have all these expectations through project work, through product sales, that you'll bring that customer to profitability. So it comes back to what I said before in tandem with that MRR of non-product costs, that you want that individual agreement to be able to cover all the overhead that takes to go into servicing that client. If you get out of whack, if you're already not being able to achieve positive cash flow just on the regular reoccurring revenue itself, Now you're playing catch up. And if you don't get that project work, or that project work is very spiky in terms of, you might have a huge project one quarter and then next to nothing the next quarter, that puts you in a very poor position in terms of cash flow. And you have enough of those clients that are negative cash flow. And then you're going to find that you're struggling to keep that 3-4 months of cash on hand. You're going to find yourself in that 1 to 2 range. And now you have all those concerns regularly. Can I make payroll? Do I need to try to get a line of credit? All those things that as business owners, we don't want you to have to worry about.
Absolutely. And I think that's just a clear indicator. Hey, make sure the agreements are profitable and don't be afraid. I mean, if you have a lot of clients and you're struggling with capacity to serve all those clients, it might be time to increase scope. It might be time to cut the last couple or this bottom 10% that don't really turn into profitability, never really matured, and give them the option, or reducing scope and services to what makes sense for the business. So we're about wrapping up here. Matt, for those too long, didn't watch, don't have the time, MSP owners are busy. 60 seconds, takeaway from today, powerful value for an MSP. Go.
Yeah, I'd say number one, the amount of cash that you want to have in the business is around 3 to 4 months. That tends to be optimal. It's not too much cash. It's not too little. You'll still be able to make all your bill payments, as well as you'll have money available for investments, like if you want to hire additional sales people. MRR of non-product costs, so your reoccurring revenue agreements, you want that to cover at least 100% of all your non-product costs in your organization. So that's both cost of goods sold and your operating expenses. So at least 100%, 110%, even better. Those pre-authorized collections, you don't want your clients using you as a bank and trying to hound them for payments month after month. Because once you get a client that hasn't paid for 2 or 3 months, now it's really difficult to have that conversation of, do we turn the service off? What do we do? And you don't want to get into that situation. In terms of those customer profitability reviews, if your client is unprofitable, it either requires a scope change, a price change, or sometimes you have to fire a client. Sometimes they're just taking up too many resources and they're actually negative cash flow. And then finally, those regular expense reviews. This is when you really need a strong finance partner, because those reviews can be tedious, and if you're not on top of them, it's really easy to get behind, where you find that you haven't done it in 18-24 months, and now you have a lot of work that you have to try to catch up on.
Best time to plant a tree was yesterday, but the best time to plant a tree is today, right, Matt? Proactive cash management, MSP owners. If you stay proactive, if you take the time, if you build it into your routine, you build it into your weekly flow functions, you'll find yourself with a little less stress, a little more cash on hand, and a little more flexibility in what you can do as a business owner to maximize the profit or investment or the goals of your MSP. Want to thank you, Matt, once again for taking your time to be with us today and to present. If those watching, if anybody would like to be a guest or you'd like to join the Stride Live, go ahead and reach out to us at www.stride.services, or you can reach out directly to me at casey.seaborn@stride.services. Matt, thank you once again. I do appreciate you joining our Stride Live today.
Thanks, Casey.
Have a good one.
Appreciate it.
And we ended. We are good.